Hello traders, my name is Horvat, and in today's video we will take a look only on stock markets. We will particularly look on the US indexes and as well as DAX. I will focus on long-term charts today and just present you in a very short video just simple outlook based on Elliott waves from my perspective, because I have been asked several times in the past couple of weeks since stocks turned down if I'm looking for some major top here. Okay, but always when it comes to trading and analysis, instead of focusing on possibilities, I tend to focus on probabilities. Okay, so if we take a look on an example, just a simple example here, for example, the market was falling and here the market was rising and then again falling. So when the market was falling, let's say that this was falling for the past several years, then what's the possibility that you will catch the market bottom here and that you will be right with your analysis when you will be predicting a long-term bullish reversal? Okay, or for example here, what are the chances when market has begun to rise that you will call a top at the right time and that you will turn bearish even before the market turned to the downside? So probably the probability is very small. Okay, so instead of waiting on a bottom formation or top formation, we just need to label the wave count in the way that we always stay with the trend and always be prepared on more gains if the market is rallying, or maybe on even further weakness if the market is falling in a bear market. Okay, so obviously I will always try to look just for temporary pauses, for a correction or for counter trend movements, if I will see markets reversing, like now on the S&P 500, Dow Jones, DAX, FTSE and so on. So I see markets, and I suspect that markets are only in corrective phase. Okay, because I will not call a long-term top just because markets turned down for I don't know, 5%. Okay, so I will take a look now on long-term charts. We will take a look on monthly charts actually. So here I have charts of S&P 500. This is continuation charts. These are continuation charts. S&P futures. Then we have DAX, Nasdaq 100 and Russell. So here, firstly, from a very simple perspective, okay, when you see markets in uptrend at all-time highs, then obviously you will not label this move as a corrective. You will label it as an impulse, because this is not a counter trend movement, it's a continuation of something bigger, because you're at all-time levels. Okay, so there is open room for much more gains ahead. Okay, so obviously if there's room for even higher levels on stocks, you will counter the move in impulsive fashion. Okay, so impulses are 5-wave patterns structured by waves 1, 2, wave 3, usually strongest, the powerful wave that needs to be subdivided by 5 waves as well. Then you have wave 4 pullback, and then you have wave 5. Okay, so if we take a look on this monthly chart, firstly on futures S&P 500, of the S&P 500 contract, you will see that this rally from 2009 lows still is not in 5 waves. Actually, I see here nice wave 1, wave 2, nice extended move. Okay, now usually I said that an extended waves are third waves. Okay, so I would expect that this third wave will also be structured by 3 legs. So I see here sub wave 1, wave 2, wave 3, and looking for a wave 4 pullback and expecting another push up into wave 5 of this wave 3. So from a simple perspective, this current this current pullback is nothing else than just a correction. Okay, I see it this way because I'm looking from a long-term perspective. I'm looking on the monthly chart, and based on this, what I see, I cannot call a top here. Okay, we are still above this, well above this trend line connected from 2009 lows. You can see that we are above that trend line on all of these markets. Okay, so I see market here on the S&P in wave 4, expecting a move up into wave 5 of wave 3. Okay, then if we take a look on DAX, same idea. I see pullback in wave 4, expecting a move up into wave 5. Okay, we are well above this wave 1 invalidation level. Same on Nasdaq. Now maybe we should pay attention more to Nasdaq, because here the wave structure is even cleaner. Okay, so actually let's switch it to maybe to weekly chart, and you will actually see that on Nasdaq I labeled this as a wave 1 move from these 2009 lows, okay, which could maybe also be a flat, but I will not go into the details because I don't think that's important at the moment. So this is wave 1. If after wave 1 you would expect an extended wave 3, so you would need 5 subwaves. So I see this as a subwave 1, subwave 2, and then you have again an extended wave 3. Now this wave 3 also needs to be subdivided by 5 smaller waves, and you can clearly count this move as a nice clean 5-wave move. Waves 1, 2, extended wave 3, wave 4, and wave 5. Okay, that completes a blue wave 3. So if that's the case, then you know that the wave 4 is unfolding. Now wave 4 usually retraces to the region of a former wave 4, which in our case comes in at those levels from April of 2014 lows, swing lows. So this comes in, actually it's quite away from current levels. Okay, but based on guidelines, based on previous swings, previous corrections, previous pauses within ongoing trend, I suspect that this is just another correction, as was each previous one, and that this market will, or it could, find a bottom at these former swing levels. Okay, so I see this as a corrective, only temporary pause with an ongoing uptrend. I will be expecting a move into wave 5 over an extended red wave 3. Okay, so let's go back to monthly now. Now this that I went through, actually this is on Nasdaq, is the perfect, actually a textbook example of an impulse in progress. Okay, so if this count on Nasdaq is correct, then obviously on Russell we should see something similar. I see an extended red wave 3 in progress. Now we are in this sub wave 4 pulling down already, maybe in third leg. We are well above this invalidation level because wave 4 must not trade into territory of a wave 1. So I see this again as a very nice, just a temporary corrective pause. There is a lot of fear on in the markets. Obviously traders are looking to go out, especially long-term investors who were in this uptrend for a while now. They are obviously, at least I would do it, will took some money out of the market, so this will send market even lower. But for the midterm traders, I think that this correction could be just another opportunity to look for setups, for idea how to get involved into this uptrend, because clearly as long the markets, those markets will trade above this trend line connected from 2009 lows, it means that the trend is up. Okay, only a decisive push beneath this trend line will invalidate my bullish outlook. Okay, but again, as I said earlier, what are the chances that this is a long time, an all-time
stop forming here and that market will fall very sharply. Okay, if we consider that market is constantly, especially stock market is constantly in uptrend, well, then obviously we should look for probability to reach even higher levels after any solid corrective retracement or pullback. Okay traders, that's it from me, and hope to see you on our website. If you have any questions, please just pop us an email and we will be happy to answer. Have a good day. Bye.